Hello, welcome back, guys. We're having some news from Nvidia, which actually gave us an announcement that brought the stock down about 8%, as you can see right now. So what happened is what we're going to examine in this video, and also we are going to try to take a look at whether this kind of pretty much decrease in stock price can actually give us a potentially interesting entry point here. So let's take a little bit of a look at what happened with Nvidia today. Now I'm not gonna be taking a look at this report here because it's a little bit complex to read from here. So I'm gonna be using this one instead, which kinda talks about Nvidia and their warning on second quarter revenue, because I think it's easier to follow here for the video. But before we do that, thank you for being around. Please leave a like if you enjoy this kind of content. That really helps. And remember to subscribe if you're not a subscriber already. Okay, so Nvidia shares dipped Monday after the company released preliminary earnings that show early second quarter revenue of 6.7 billion, which is well below the outlook of 8.1 billion. So the company actually had an outlook for 8.1 billion, and they came out and said that they're expecting something close to 6.7. And this is, as you can understand, a massive decline here. And this is why the stock went down, I believe, even more than 10% at some point. So right now it's actually pretty much recovering a little bit, I believe. So you will see here that the company released this preliminary potential earnings report, but it's interesting the fact that they said that this reflects weaker than forecast gaming revenue. So gaming seems to be doing worse as time progresses after COVID is getting a little bit forgotten, I suppose. And it's down 44% sequentially and 33% from the prior year. Now, I was hearing that most gaming companies have been going down recently in terms of their stock price, apart from EA, I believe is one that was actually still doing well, Electronic Arts that is, with their FIFA line, I suppose. But overall, it looks like gaming is suffering a little bit lately. They also said that its data center segment has been impacted by supply chain disruptions here. Preliminary revenue of 3.81 billion below the company's expectations here, which is still up 1%, but still below what they were expecting. Now, the executive vice president and CFO of Nvidia said she believes the company's long-term gross margin profile remains intact. So we have slowed operating expense growth, balancing investments for long-term growth while managing near-term profitability is what she said here, and they do continue their buybacks as they foresee strong cash generation and future growth. It is interesting what happened here with Nvidia, and of course this kind of led to this decline in the stock price, as you can see over here, and seems like we may have a little bit of an extra decline here. Remember, the stock price was about twice what it is right now. Their high was $346 at some point last year, and they are currently sitting at 175. And this could even go a little bit lower based on what we're seeing right now with their announcement. And even though I don't really want to dive into this specific article here, the specific announcement, I kind of wanted to quickly show you this table, which kind of shows you what is happening with gaming, data center, professional visualization, pretty much the revenue that the company generates, and quarter-over-quarter growth that is, and year-over-year growth, which seems to be down for a lot of things, as you'll see here. It's up for data centers, it looks like year-over-year, but remember we said that this was less than expected really, and automotive seems to be doing very fine here. But gaming seems to be the biggest problem here, and I thought this table kind of shows you what the company wanted to talk about in this report pretty much. Now let's go back and take a look at whether this kind of slowdown in the company stock price can potentially give us a nice entry point here. Now, if you take a look at the P ratio and price to free cash flow ratio, it's still expensive. These are actually the current ones. And so they are still expensive. They are going down, as you'll see, which is a nice sight for somebody wanting to buy the company, but they may still be expensive. And we do want them to continue actually to do their buybacks, the things that they have announced, which will bring the outstanding shares down, and it's nice to see. But we need to be examining what the company's stock price would be today with the current outstanding shares, and also pretty much with the current valuation that's all around the PE ratio, the price to free cash flow, and everything else that the company does. Now, I am willing to overpay a little bit for a company of this sort just because it's growing tremendously well, as you'll see over the years. All their growth values are great. They have pretty awesome margins when things are working normally, I suppose, for the company. Great return on equity, low debt over here is what you will see. The total liabilities to free cash flow is also low. The debt to equity ratio is very low. You're paying a little bit of a dividend, which is very, very low, as you'll see. And we can always examine that in detail and take a look at the dividend stub. This is what will help us here. So let's see what kind of dividend. Yeah, the dividend is pretty much steady for a long time now. They're paying the same amount, very, very low dividend here, so it's almost negligible. We shouldn't really be paying too much attention to it. And frankly speaking, practically speaking, this is a company that is not really paying any dividends, frankly. But okay, it's worth at least taking a look at it. And the next thing to do here is to see whether this kind of this kind of a decline, is it really an interesting opportunity for us to be buying, and how cheap is the company or how expensive the company is right now. Now, in terms of revenue growth, the company has been growing pretty nicely over the years. The 5-year average growth has been 33%, 33.7, which is amazing to see. So we're going to go, of course, more conservative here, but still rather high. So I'm going to go 15, 18, and 21 and see what we get out of this one. For the net income margins, again, they have been rather high lately. About 31% is their average. So again, I'm going to go somewhere in between 27, 29, 31. And the free cash flow margin, I think that I love to see consistency close to each other. Yeah, there will be some years that there will be the odd one out because there could be some unexpected sales like one-off items and things of that sort. But overall, they seem to be at around 100%, 105, 95, something of that sort. So we'll go somewhere in between 90, 100, and 110. And for the annual return, I'm going to be trying 13%, which is what I typically like to be making out of any single stocks. And if we hit calculate on this one, it is still problematic because the company is expensive where it is right now, significantly expensively even. And even if we take a look at this kind of revenue and this kind of net income margins and free cash flow margins, which are not lucrative but very normal, they are not lucrative, but they are not also pessimistic. And so this is something that could very, very easily play out. And with these kind of scenarios, none of these scenarios is actually even approaching the current price. We have to go much, much higher in terms of revenue growth. I bet that even if we go 40%, we may still not be there. Let's try that just to see that. Actually, we are there with 40%, but what about 30%? So 30% is giving us, 161. So we're not there with 30%. We would only be there with 40%. That is every year for the next 5 years. Well, remember, the average has been 33.7. So 40 is probably not happening. 30 could happen, but it is probably the most aggressive scenario. And you cannot be that aggressive when you are making your estimates here. You have to go much, much more conservative in order to be safer, in order to make the safe investment here. And so while I love the company and it keeps giving a better price, it's still just not there. I mean, it would have to go down significantly for me to consider buying it. And I could see myself again paying a little bit more just because of what this company is and what kind of growth they have, what kind of margins they have operating in tech space. I'm willing to pay a higher price, potentially even reaching the medium and high projections that I have, but I'm not really that willing to go much far off. So I would probably be willing to be buying this company at around $100, maybe 110 if I was feeling luxurious at the time. But overall, at this price, 175, it's just not a buy for me. I'd have to, overpay a lot to do that, and it just doesn't make a lot of sense for me. I'll for now wait a little bit and see whether I can get a little bit of a better price, with upcoming news and the upcoming reports of the company. Maybe we'll have a little bit of a deeper decline depending on what the overall economy does. Now, you may remember that some senators were buying this because of the CHIPS Act, I suppose. Nancy Pelosi's husband was one of these guys. I believe they sold out of that right now, so it's it's going to be on the rest of the next filings, I suppose. But overall, there have been some purchases from senators really on Nvidia. And in terms of insiders, what you can see here is typical action for the most part. It's mostly awards, gifts, pretty much compensation given to employees, and not insane sales here, which is something that you would like to avoid. Again, comparing it to the overall securities owned of a person, you want to see how much they are selling, and if they are overselling here. It doesn't seem like it's the case. They seem to be selling normally here. So yeah, that's what I'm seeing with Nvidia. I would like to know your opinion about it. Tell me what you think about this company. Do you think it's cheap enough? Do you think it's still expensive? Are you looking to buy this one, or you are looking to wait and see if you can get a better price? Do leave a comment and let me know. And remember, you can always become a Patreon and pretty much gain unlimited access to our tool. You can find links in the description box below this video if you are interested, or just visit myinvestorsheaven.com and you will actually be able to sign up from there. So thanks for watching this one, and I'll see you soon, guys. Bye bye.